Have you heard of the phrase, "Show me the chart and I'll tell you the news"? Now, the real meaning of this quote isn't about predicting headlines. It's about understanding how fundamentals actually get priced into the market. So, why does this saying exist in the first place? Well, very often, by the time a news headline hits your screen, the market has already reacted. Not because charts are magical, but because fundamentals reach the market long before they reach the media. Now, fundamentals, of course, move markets, earnings, growth, policy, supply and demand. But traders almost never receive that information in real time. Why? Because data is delayed, news is filtered, and insiders act early. So what shows up first? Well, positioning. And positioning shows up on the chart. That's why you often see the market move before the narrative appears. Price doesn't wait for journalists. It reacts as soon as traders adjust new information, whether it's public or not. So the saying doesn't claim that charts predict the news. It simply reminds us that markets absorb fundamental changes much faster than headlines can explain them. Now, price action is the market's immediate reaction to changing fundamentals, both the known fundamentals and the hidden fundamentals. Now, it reflects things like early buying or selling based on new intel, changes in risk appetite, sentiment adjusting to expectations. Now, these kind of behaviors leave footprints on the charts. Higher lows, tightening ranges, volume shifts, failed highs or lows. Now, the chart often shows that something is changing long before the headlines confirm it. And this ties into the first principle of what technical analysis is based on. Price action discounts everything, even the information that we do not have access to. And charts don't forecast headlines. They reveal how the market is already processing new fundamental information. So by the time a headline hits your feed, the people who move the markets have usually already acted on it. So economists see data shifts early. Analysts hear guidance before the earnings call. Institutions adjust their models instantly. And retail hears the story last. So reacting to headlines usually means reacting after the market has already priced in the idea. So the chart isn't really predicting the news, it's exposing a reaction that started earlier, beneath the surface. And the headline that follows, well, that's just a narrative layered onto the move after it has already happened. This is where many traders misunderstand this. It's not fundamentals versus technicals. It's fundamentals and technicals. Because fundamentals create the direction. Technicals show us the timing, the structure, and the behavior. So think of it like this. Fundamentals are the engine. Technicals are the dashboard. One tells you what powers the move, the other shows you the footprints of the move in real time. Understanding both gives you clarity, and most importantly, it helps you recognize the moments when the two approaches align. So, instead of reacting to headlines, focus on the reaction in price. So ask yourself, is the market absorbing bad news or rejecting good news? Are buyers stepping in early? Is a level holding because of strong fundamentals or because of fear? Is volume confirming the story or is it contradicting it? Now your edge comes from reading how the market prices information as it emerges, not from waiting for the story after the fact. So yes, charts often move first, but not every move is meaningful. Some moves are noise, some are liquidity driven, some are just mechanical flows. That's why fundamentals still matter, because they provide the why, the context, inflation, growth, earnings, policy, risk appetite. Now the chart shows the reaction that is happening right now. Fundamentals reveal whether that reaction has weight, whether the move makes sense in the broader picture. So you need both to see clearly. So fundamentals drive markets, but charts reveal how those fundamentals are priced in long before the headline arrives. Now when you learn to read both, you stop reacting late and you start understanding the market as it unfolds. Now if you want to build a framework to understand market moves and start developing your own edge, join the link in the description and gain access to live and recorded webinars that I've spent the last 15 years refining, designed to help you build a proper foundation for your market analysis structure.